Hi guys, my name is Tiffany. I am one of the co-founders of Investor Life. Today's topic for our video is the fundamentals of successful joint venture real estate investing. So joint venturing is where, like us, we bought over 100 properties with using other people's money. We did all the work, they brought all the financing, so the down payments and the qualifying. If you wonder, maybe you're like us, that we were 24 years old, we were broke, and we didn't have a choice. We had to joint venture. Or maybe you're just at that point where you've bought a few properties and now you're ready to scale and get bigger, but of course you've hit that financing ceiling, or you've run out of down payment money. The most important thing to a joint venture or a successful joint venture relationship is getting that foundation set. Just like in a relationship in real life, it's getting that foundation set. One of the things that we talk about all the time is that it's very similar to dating. So if you wouldn't go for dinner with someone, if you wouldn't, spend your evening with them, then most probably you won't want to joint venture with them. What are some of the things that tell us, those cues? Well, are we in general going in the right direction together? Like, do we have the same life goals? Do we have the same ethics? Do we have the same morals? Because you got to remember, this is a really long-term relationship. Just like dating someone, you're not just, talking the next 2-3 months of your life. You're talking years and years and years. In general, do you get along? In general, do you have the same communication styles? In general, do you have the same morals, ethics, goals in life? Are you walking down the same path, or are you walking down separate paths? That's a big question to ask. If you wouldn't go for dinner with them, you most probably wouldn't want to spend the next 10 years partnering with them. So one big mistake that we made when we first started looking for joint venture partners and raising capital for our real estate deals was that we just focused on the deals, the numbers, the opportunities, graphs, charts, all that kind of stuff. But we learned really early on that it actually isn't about the deal. The successful foundation of a real estate, like a joint venture relationship, is actually for you to come together and see if you can actually get along, see if you like each other, see if this is someone you want to be dealing with for the next 7 years, 10 years, 5 years, whatever it might be. Do you like each other? That's the bottom line. That's the first filter. Another thing you want to look for is communication styles. If I communicate best on the phone, but they can't stand taking phone calls, that's probably not a good beginning for you. Vice versa. So how do they like to communicate? And is that the same way that you like to communicate? Are they, micromanagers, and do you like direction? Like constant direction? Or are they super hands-off and you want direction? So you have to find someone that's going to be your complement. You have to fill each other's voids. So the foundation, I know probably watching this video, you came into it wondering the foundation, like how do I structure? It's not about that. It really is not about that. It's about the relationship. How are you? Do you like each other? And how do you communicate? Just like in dating. If you don't have those first few things down pat, you're never going to get to the next points, the next stages. So another thing you want to think about is timelines. If your timeline is 20 years before you need to, benefit from real estate, and their timeline is 5 years, you're probably not a good match. Risk adversity. If you're a go-getter and you don't mind taking these crazy risks, but they're very risk adverse, you're not a good match. So these are the kinds of things that set the foundation for a successful joint venture. We've had joint venture partners that we've had for upwards of 15 years now. Initially, we went into it with a 5-year plan. We planned to invest for 5 years, sell the properties, split any profits, and get out. But because they've worked, because we had a good foundation set to begin with, we're now at the point where these properties are almost paid off and they're cash flowing very well, and we're all very happy with where we're sitting at. So setting a good foundation is absolutely essential. So if there's one thing I want you to take from this, it's forget the graphs, forget the charts, forget all the data and the ROI and the cash flow and all the numbers. Until you've set your foundation, one of the relationship being first and foremost, until you've done that, don't even worry about the deal. Go for coffee, talk about the sky, talk about hockey, talk about whatever you want to talk about. Just see if you actually get along and if you want to spend the evening with this person. If that's the case, you probably have a good foundation for moving forward and starting to talk about those more essential things like ROI, cash flow, and those kinds of deals. If you found this video helpful, there's more videos for you to watch in the description, in the links below, and also join us on Facebook in our Fearless Investors Facebook group. And there we do free weekly trainings and we answer all your questions, and there's a great community of people that are trying to do the exact same thing that you are. Reach their goals and hit all of their freedom choices by investing in real estate. So we'll see you over there, and we'll see you on the next video.